Ladies and gentlemen, good day and welcome to Shaily Engineering Plastics Limited Q4 FY22 earnings conference call. This conference call may contain forward-looking statements about the company which are based on beliefs, opinions and expectations of the company as on the date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Amit Sanghvi, Managing Director, Shaily Engineering Plastics Limited. Thank you, and over to you, sir.
Thank you very much. Good afternoon and welcome to all the participants to the post-results earnings call of Shaily Engineering Plastics. I hope you're all keeping safe and healthy. I have with me Mr. Sanjay Shah, our Chief Strategy Officer, and SGA, our Investor Relations Advisors. I hope you've had a look at our investor presentation that is uploaded on our website and the stock exchange. I'm happy to share that we have registered our highest quarterly revenue in for FY22 and recorded highest ever revenues on a yearly basis in financial year 22. This has been on the back of improved traction seen across segments and ramp up in projects. The visibility we have across various businesses gives immense confidence that we will be able to scale up further and grow. Revenue growth has been aided by growth in business across verticals, especially the healthcare and the toy segment. We've added new SKUs in the home furnishing segment as well, and also in devices. Deepening our foray in the intellectual property related products for healthcare. Healthcare is now our second largest revenue contributing segment. During the year, we've added 12 drug delivery devices in commercial production. During Q4 FY22, IP has been acquired for another pen injector. I'm also happy to announce that a product manufactured by Shaily for Sanofi has been the recipient of a Sustainable Design Award at the Pharma Pack exhibition last week in Paris. We've also finalized a contract for pen injector with a leading Indian pharma company. We have built a scalable model which should help us achieve 2 to 3x revenue growth in the coming 5 years. Through Shaily UK, we cater to global markets today. We're deepening foray across contract manufacturing of medical devices, own IP developed products, and specialty packaging. Our ability to develop IP and our own injection system platforms is finally paying off. The scope of business is large in this area, and we aim to scale up in the coming months and years. On the toys front, we received orders from global players and have started ramping up capacities. In this business, our clients have plans to source significantly from India, and we have essentially limitless opportunities to grow with that. Under the automotive and engineering segment, we have started commercializing the orders received and expect ramp up in the current year. During FY22, the company has raised funds. We've started utilizing it to expand our core business of home furnishings, also utilizing it towards toys and healthcare. We're planning capex spend of approximately 200 crores over the next 2 years, out of which more than half of the spend will be towards pharma, part of the business. I am further happy to share 3 additional developments. We are now listed on the NSE. We've also added Mr. Samresh Parda and Mrs. Sangeeta Singh as independent directors to our board. Their profiles are part of our presentation, have been uploaded. I request you to go through that. We've also appointed Mr. Ashish Somani as the new CFO of the company. Ashish is a qualified chartered accountant and a law graduate and has extensive experience working with various MNCs across the manufacturing segment. This is all from my side. I shall now hand over the call to Mr. Sanjay Shah, our Chief Strategy Officer, to give you the operating and the financial highlights. Thank you very much, and over to you, Sanjay.
Thank you, Amit. Good afternoon, everyone. I shall share with you the highlights of our operational and financial performance for Q4 and FY22, following which we will be happy to respond to your queries. During the quarter, we processed 5,562 tons of polymers as against 4,356 tons in Q4 FY21, an increase of 28% year-on-year. For FY22, we processed a total of 19,474 tons of polymers as against 14,602 tons in FY21, an increase of 33% year-on-year. Machine utilization rate was 53% in Q2 FY22 and 60% in FY22. Exports during FY22 stood at 76% of total revenue as compared to 74% in the same period last year. Now I shall brief on the standalone result highlights. Revenue stood at 152.6 crores during Q4 FY22 as compared to 109.8 crores during Q4 FY21, a revenue growth of 39%. This is our highest ever quarterly sales, even highest ever yearly sales. For FY22, revenues stood at 565.9 crores as compared to 360.6 crores during FY21, a growth of 57%. EBITDA stood at 21.6 crores during Q4 FY22 as compared to 22.1 crores during Q4 FY21. EBITDA margin stood at 14.1% for Q4 FY22. Margins in Q4 were under pressure due to increases in input prices, especially on the raw material front, polymers, packaging, steel. These costs will be passed on in the coming 2 quarters to customers based on the arrangements which we have. For FY22, EBITDA stood at 89.8 crores as compared to 62.1 crores during FY21, a growth of 45%. Tax stood at 7.4 crores during Q4 FY22 as compared to 9.7 crores during Q4 FY21. Net margin stood at 4.8% for Q4 FY22. For FY22, PAT stood at 35.1 crores as compared to 22 crores during FY21, a growth of 60%. Cash PAT for Q4 FY22 was reported at 14.3 crores as compared to 15.3 crores during Q4 FY21. For FY22, cash PAT stood at 61.6 crores versus 41.5 crores in FY21. During FY22, working capital has increased mainly due to increase in inventory levels. This is mainly on account of logistics issues which we are seeing, and we have taken a conscious decision of having a little higher inventory, but as this situation improves, we would basically bring down the inventory level. This is all from our side. Now we can open the floor for Q&A. Thank you.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, if you wish to ask a question, you may please press star and 1. A reminder to the participants, anyone wishing to ask a question may please press star and 1. The first question. Participants, if you wish to ask a question, you may please press star and 1. The first question is from the line of Aarti Sharma from PCK Investments. Please go ahead. Aarti, your line is in the talk mode. Please go ahead. As there's no response from Aarti, we'll move on to the next question. That is on the line of Ankit Agarwal from ARC Capital. Please go ahead.
Yeah, thanks for the opportunity. So I have a question on the home furnishing business. So any development on the addition of customer in home furnishing, and any particular geography those customers are from?
So we basically are shipping to our home furnishing customers, and we supply them across the globe. So, and we continue to grow the business with this customer.
Okay. And so the next question is like, with additional contribution from pharma and toys coming into the business, what kind of overall margin improvement that we could see in the next financial year?
Ankit, we typically don't give out margin guidance. What we have said in the past is, as the business grows and as you see volume growth, you basically see margins improving on an overall basis, whether it's at an EBITDA level, at PAT level, or even at an ROC, ROE level. So that's what I would reiterate. We would not be able to give margin guidance.
Okay, fine, sir. Thank you. That's it from me.
Thank you. The next question is on the line of Aman Vij from Astute Investment Management. Please go ahead.
Yeah. My first question is on the new plastic facility. If you can talk about what was the utilization in Q4 and when can we see a peak utilization in that facility?
So, Aman, good afternoon. With the new plastic facility, we don't report individual numbers, but we had fairly good, decent utilization levels close to what we have reported. One of the challenges which we faced in quarter 3 and which continued in quarter 4, which I'm sorry, I missed out on my speech, was availability of containers. And we continue to face a similar situation in quarter 4 also, where availability of containers and logistics hampered our production and dispatches and revenue. In fact, we could have achieved a much higher revenue if containers were available.
Sure, sir. So the situation is still the same, or has it improved in May or in June coming?
It's improved marginally, but we're still seeing some challenges. So April onwards, we've seen some improvement.
Sure, sir. And for
some improvement, but it's still taking some time.
Sure, sir. So on FY23, what kind of utilization levels are we targeting? Can we achieve that 75% plus kind of utilization?
We would be looking at somewhere on those lines. What you're saying is right.
Sure. That helps. Next set of question is on the capex plant. So we have two capex plants. One is another, I think, additional facility, and one is pharma expansion on the pharma unit side. If you can give timelines for the start of the capex, as well as by which quarter can we see the commercializations of these two new plants?
So pharma, we've already started the work, and we expect the pharma facility to be commissioned by the end of this year. Some of it will get spilled over to the next year in terms of developments and everything which we are doing. But the facility would be ready by the end of the year, the current financial year. On the home furnishings and toys and rest of the businesses, we are still in discussions, and once we tie up that business, we would basically be looking at starting construction. But my sense is we'd probably be looking at starting something by quarter 4 is when we would start constructing them.
Sure, sir. So till we start this new facility, so in toys division, like last year we had a good visibility. We end up doing, we had orders of $10 million, and so have you seen any increase or uptake in orders on that base?
I'm sorry, I lost you somewhere in between.
Yeah, I was saying in toys.
Repeat your question.
Yeah. In toy segment, last year we had a order book and visibility of $10 million, which I think we would have achieved, if not exceeded that. So for this year, have we gotten similar orders or even increased orders, given they would have seen our work and maybe given us more orders?
We are already executing 2 projects for some customers. 3 projects for the 2 customers we have, and we are in discussions for other new projects with them.
So for FY23, do we see a growth on that FY22, whatever sales we did in toys? Do we see a good, healthy growth on that high base also?
It's a little too early for me to comment on that. But I see the numbers which we did in FY22, we would probably do similar numbers in FY23.
And we also have projects under execution, which is why it's a little early for us to comment.
Okay, but at least we'll maintain that number, if not improve it. Hello?
Mr. Amanvich, are you done with your questions?
Ma'am, just one final question I had.
Please proceed.
Yeah, final question is on the pens division. So, sir had talked about maybe for FY23 we are targeting around 3 million own IP pens. So, if you can talk about the same, are we still sticking to that guidance? And we have also talked about maybe achieving 20 million own IP pens in the next 2-3 years. So, if you can talk about from which quarter can we see own IP pen scaling, as well as are we dependent on 1 or 2 customers to achieve that 20 million pen sales, or there are maybe 10 customers, so that at least if one customer is not performing, we have backup plans. If you can talk about the pens division.
Aman, can you take that?
Yeah. We still, guidance given earlier still, or not guidance, but numbers given earlier still holds true. We are in the process of supplying. We are already supplying in the current year, and the numbers are increasing. So I think we're well on track for the current year. You always have a potential couple of months spillover, which is expected in such a business. And then scaling up to 20 million, is thing, but more like between 3 and 4 years. But yes, it is with more than a couple of customers. So we have a healthy pipeline of customers, given that we're servicing the generic market here, which means we cannot simply rely on one customer. So there is a healthy pipeline of customers, which leads us to believe this volume build up.
Sure, sir. I have more questions. I'll come back in this.
Thank you.
Thank you. The next question is from the line of Nikhil Jain from Galaxy International. Please go ahead.
Hello. Yeah, thank you for the opportunity. I just wanted to ask one question on the healthcare side. So specifically with respect to the pen division, so are we working with some of these key customers who have already kind of filed and are litigating in the US market? So can you just give a qualitative indication on those, or are our customers yet to file and obviously then yet to get approval and other things?
Such specific information is highly confidential, but of course some of our customers have filed, some are in the process of filing, but almost all the supplies that we would have made for clinical batches would essentially either be filed or be close to filed.
Yeah. See, the point is that it's not only pen which is a critical component in that kind of business. So there are other facets, so where the companies may kind of get into problems or may have a change of plans due to delays and other things. So that's where I was just trying to understand, because we know at least the top three ones have already kind of filed and are litigating. Yeah, and some have settled also. Yeah.
Sorry, we can't hear you. I can't hear you.
Oh, okay. No, what I was saying was that in this kind of a...
Mr. Jain, sir, can you use the handset mode while speaking, not the speakerphone? Your voice is unclear.
Oh, is this better?
No, sir, it's still the same.
Still the Okay. Is it better now?
Sir, slightly better. Please proceed.
Yeah. No, what I was just trying to say, sir, was that this in this kind of business, obviously, that the filings can get delayed due to various reasons, and hence that was the reason for the question. If you are already, let's say, working with companies who have already filed, so that was the thing. So my second question actually was related to the.
I'll probably just add to what Amit said. So we have on some molecules we have multiple customers on the same molecule. So
Yeah.
we would basically there would be somebody who would be doing the filings is what I would say.
Okay, that's good to know. Yeah. Okay. And any guidance that you want to give for FY23, or it's as you said, too early to do that?
I think we would refrain from giving a guidance.
Okay.
But we would still stand by whatever we have said at the end of FY21, that if you look at it on 3 to 5 year period, we basically look at somewhere between a 25 to 30% CAGR growth.
Okay. Okay. And on the margin side, do we expect whatever has happened in the last 2 quarters, so would be normalized over the course of the year, let's say in FY23, hopefully?
Yes, okay. It probably should be faster than where that, but yeah, we do expect the margins to go back to normal level.
Yeah, sure. Thank you. Thanks a lot.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Yash Bajaj from Lucky Investment Managers Private Limited. Please go ahead.
Hello. Yeah, hi sir. Am I audible?
Yeah, yes.
So just one question I had. What growth in the home furnishing and pharma business in FY22?
Yes, we don't report individual numbers, but we've seen growth across all of our business segments in FY22.
Okay. So, in line with the overall growth of the company would be a fair way to understand the growth of respective divisions.
So there will be different businesses which will have seen different levels of growth.
Right.
So toys, we were at a very small level in FY21. So toys has seen, we've done fairly decent numbers on toys. We have seen we've seen growth on our pharma business, we've seen growth on our FMCG business, we've seen growth on our home furnishings business, or even on our other businesses. So, but then every business will have varied levels of growth.
Or just to understand, either the home furnishing business and the pharma business would have grown on a faster pace as compared to the other 2 businesses. Would that be a correct understanding?
No, as I said, probably this year toys has grown faster. Toys has been, from a percentage level, toys has been...
As a percentage, yes. Yash, as a percentage, yes. But as a value, of course, the baseline are very different for the home furnishings and the other 2.
Yeah.
Okay, sir. Okay. Thank you so much.
Yeah.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Aman Vij from Youth Investment Management. Please go ahead.
Yes, thank you for the opportunity again. Sir, on the carbon steel business, if you can talk about the same, we were facing some issues. Are the issues resolved, and do we expect full utilization in FY23?
So as we speak, we have already commercialized all the products, and we are looking at the ramp up. So we should be very close to full utilization levels during the year. I'm not sure whether we will see the same overall utilization numbers being at full for the whole year, but it will be ramped up to full before the end of the year.
And do we need to add any products, or those 6 products which we have is enough to fully utilize and achieve peak turnover in carbon steel?
The numbers which we talked about, these 6 products which we do, the volumes on that would basically meet with the numbers which we talked about, and ensuring that we get to the utilization levels which we include.
Sure, sir. On the number of SKUs for IKEA as well as the number of employees, if you can give the current number.
On the home furnishings front, we basically have added a lot of SKUs, so we are probably currently at about close to 60 plus SKUs on the home furnishings customer on the plastic side. Aman, I lost you on your second part of the question. So.
The employee count currently. Employee number.
Number of employees varies depending on the requirements in terms of contract workers and everything. But we would be somewhere in the region of about anything between 18 and 2,200 people on a month-on-month basis. Everything put together, blue collar, white collar, on the whole off-road.
Yeah, because the presentation talks about the same 1,500 number. I'm not sure it is updated properly, and even the SKU for
the presentation would not have been updated. So that's the reason for that. You're right. Thanks
sure,
for pointing this out. We will have that correction done. Thanks, Aman, for pointing this out.
Sure, sir. So for FY23, among these 3-4 segments, where do we see the strongest growth, and where maybe there will be little flattish kind among these 3, 4, 5 segments we have?
So we will see growth on home furnishings. We will see growth on carbon steel. We will see growth on pharma. We will probably remain at a flattish level or with some growth on the toys, because we did large projects last year. We are still working with customers, and then we wanted to see how the business evolves. But then we are looking at building up the pipeline for next year on that. We will see growth on some of our other segments also. So automotive, some of the business which we do will see from a percentage level very decent growth. But overall on that, the business is pretty small. So I would say we'll probably see growth, different percentage level growth, but we will see growth across all segments.
Sure. And
a couple of things which you need to, we started the new plastics facility end of September. So we basically had 6 months of revenue where we had a container issue. So that facility would basically be running for the whole year. So that's something which will lead to growth coming in from there. Similarly, we're looking at better ramp up on the carbon steel business, as well as what Amit talked about in terms of whatever we're doing on the pharma part of it in terms of commercialization in the pens. So these are 3 areas where we see, from a value perspective, growth coming from these 3 areas.
That helps. On the customer addition front, if you can talk about what was the new customer we added in FY22, as well as any big customers who are we are in engagement, and maybe they are big customers where we can then ramp up our facility.
So Aman, on some of these cases we would be bound by NDA where we would not be able to name customers. But we have added, I would say, some large names on the pharma front, and we've also added a couple of names on the toys front where we have done ramp up and everything with these customers. So we have been adding customers, and we would be looking at adding more customers. But we're also looking at growing with our existing customers.
Just one clarification on toys. There are like 3 big giants, and we are engaged with only 2 as of now. Are we talking with the third person also, or are there smaller such customers available in the toy segment?
So we currently do with 2 customers, as you rightly said. We are in discussions with 3 or 4 other players also on this market.
Final question from my side, sir. There was some selling from the Bharat Sanghvi's family. You can talk about, are they actively involved in the business anymore, or they are?
No, Bharat Bhai has never been. Bharat Bhai has been based in Canada, so he's not been involved in the business right from inception. So Bharat Bhai and his family have been based there, and this was something which he wanted. How would you want to talk about it? Probably you can talk about it.
So the family has a bit of a health condition, and which is why Bharat Kaka, my uncle, wanted to basically relinquish his holding. Of course, some of the holding was kindly gifted by him to my father, and some was relinquished.
Sure, sir. That's it. This is it from my side. Thank you.
Thanks, uncle. Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. Participants, if you wish to ask a question, you may please press star and 1. The next question is from the line of Aarti Sharma from PCK Investments. Please go ahead.
Thank you, sir, for the opportunity. My first question is in respect to toys business. How many SKUs do we have with respect to Spin Masters and Hasbro?
We currently do around 6 SKUs for our customers in the toys. We typically don't name those customers, but we currently do 6 SKUs for them.
Okay, so it's been a year that we have started supply to Hasbro. So how's the feedback from the customers, and what kind of a repeat orders should we expect from existing customers?
So I think I think the feedback has been overall good. In fact, we did one of their largest products out of India last year, and that was a global launch which happened from India for Disney. So, and we are in discussions with them to see how we can grow the business further.
Okay, that was helpful. And the last question from my end is, what is the competitive edge as compared to other Indian suppliers for the toy business?
I think what Shaily brings to the table is a unique set of skills in terms of understanding of complex manufacturing, assembly, ability to manage high volume production, which is a very, very important thing. Have had a team which basically understands molding, molds, and decoration, and various things, and ability to manage logistics. So that's what we bring on the table, and that, I think, as a company, that's our competitive advantage.
Okay. Thank you, sir. That was really very helpful.
Thank you.
Thank you. The next question is from the line of Nikhil from PIA. Please go ahead.
Yeah, hi. Thank you for the opportunity. My first question is around when you report these utilization rates according for your capacity, how is this calculated? Because for Q4 FY21 and Q1 FY22, you had reported 56% capacity utilization, while the volume in Q4 FY21 was 4,356, and in Q1 FY22 it was 4,093.
So, Nikhil, there are two things here. One is, when we look at capacity utilization, we basically base capacity utilization on the number of machines which we have. We have added machines last year. We basically commercialized the new facility in September. We added machines for toys quarter 4 of last year. So every quarter we have been adding to our capacity. So when you look at the capacity utilization, what also needs to be looked at what's being added, and that's the way to look at it.
That is, I mean, understandable, but when the volumes processed is lower than the previous quarter, and if we've added more capacity, the capacity utilization should be lower than the previous quarter.
No, again, it depends on the products which we do. So,
okay. So this is what I wanted to know.
A lot of our machines are fungible. And a lot of it will depend on the type of products which we do.
Got it. So it's like the chemical business. And one more question is, do we have any competitors in Russia or Ukraine? I mean, probably because of which there are new opportunities that are emerging.
We have not come across any opportunities as of now, as we speak now. But we will be evaluating if there are some opportunities there.
Okay. No problem. That is it from my side. Thank you and all the best.
Okay. Thank you.
Thank you. The next question is from the line of Yash Bajaj from Lucky Investment Managers Private Limited. Please go ahead.
Hi, sir. Yeah, I just wanted to understand the rationale behind the 200 crore capex which we are planning for the next 2 years, and especially towards the pharma segment. Is it like a new customer addition or new orders from existing customers? How is it like?
So yes, we have talked about multiple pens and pen platforms which we are looking at commercializing. We are commercializing and we are looking at commercializing. And our customers are doing the filings with these pens. So we see a ramp up on this business where we know there's a clear path in terms of growth. If we have to meet that growth number, we would need to make these investments. If these investments are not made and the plant is not ready, we would not be able to ship to customers.
Okay. Yeah. Thank you.
Thank you.
Thank you. The next question is from the line of Viraj Shah from Shah Investments. Please go ahead.
Thank you for the opportunity. So, sir, I have a question on carbon steel business. How is the margin profile with carbon steel business as compared to plastic business? Hello?
So, Viraj, when you look at from a margin profile, once we get to better full utilization levels, we will have similar or little better margins from carbon steel as compared to the overall numbers which we got.
And sir, are we planning to diversify our customer base in this segment anytime soon?
We look at doing it, but not in the near future. Once we get a full ramp up, satisfy the requirements of this customer, then we will decide.
Okay, thank you.
Thank you. The next question is on the line of Aman Vij from Astute Investment Management. Please go ahead.
Yes, sir. One question on the gross margin side. So we used to do 40% plus gross margin 3-4 quarters back, and now every quarter it is reducing. So if you can explain how long does it take to pass on? Because if it was 2 quarters, then we had faced Q1 and Q2 also gross margin pressure, but till Q4 the pressure was even increased. So if you can talk about, are there particular segments where the lag of passing is more, and in some segments we can quickly pass on? If you can explain the margin.
So when there are with different customers, we have different pass-throughs. It could vary from a quarter to 6 months. The reason why you are seeing this thing continuing is, if you were to look at quarter 1, quarter 2 of last year, quarter 1 had seen a huge spike in raw material, where that got passed on by end of quarter 2, quarter 3. Similarly, end of quarter 3 and quarter 4, because of Russia and Ukraine, we have seen crude going up, and because of that, input prices going up, packaging prices going up, steel prices going up. The second thing which impacted was the dollar rate. Whereas with the import materials, we also get impacted by the dollar rate. So both of these things put together impacted in quarter four. That will get passed on to customers as we speak when we look at quarter one and quarter two. So that will get negated. If we don't see increases in raw material prices in quarter one, quarter two, I think by end of quarter two, we should then get back to normalized numbers.
And the normalized number, is it 40% or is it now 36, 37%? What is the normalized gross margin for our business?
I mean, I would not want to get into that because a lot of it depends on the mix of the products which we do.
Okay, but do you think Q4 is if further prices doesn't increase, Q4 is the lowest 34% gross margin, and there is only upside to this number?
Yes, I think I would agree with you on that.
Sure, that is it from my side.
Thank you. The next question is from the line of Ashay Jain from Jain Capital. Please go ahead.
Yeah, thanks for the opportunity. Couple of questions on healthcare business. Firstly, with whom will be competing in UK business? So will our clients be our competitors?
Repeat your question, please. Your voice is
on the healthcare business. Hello.
Yeah, your voice is breaking.
Yeah, on the healthcare business. So with whom we will be competing in UK IP business, and will our clients be our competitors?
Our clients are not our competitors. We will primarily compete with companies like Ipsomed, Owen Mumford, SHL, Nemera. These are, Gerrit, Hasselmeyer. These are a few, 5 or 6 players prominent in the industry for offering injection system platforms.
Okay, understood. And lastly, so we've acquired an IP for pen injector as well as finalized contract for the same. Just wanted to understand what is the further scope of business to them.
I mean, when we create platforms, platforms are suited for multiple molecules. And on those multiple molecules, we also have multiple customers. So the scope is quite large. As we keep modifying the platforms to adapt newer molecules, we increase the scope of our offering substantially.
Okay, yeah, that's all from my side.
Thank you. Ladies and gentlemen, that was the last question. I'm sorry, we have one other question in queue. That is on the line of Kunal from Carnelian Asset Management. Please go ahead.
Hi, thank you for the opportunity. I had a question particularly for the toys business. So, toys business, whatever little I understand, is a very complicated business in the sense that there are multiple parts that has to be made. Also, the frequency of, it keeps changing. It's not like a home furnishing business or for that matter, appliances business where things stay constant. But at the same time, China was a very big player in toys, right? So how do we see scalability of this particular business for us in the sense that it's, in that sense, different from what we have been doing?
So, Kunal, you're right. Toys is a business which needs new products added every year. Otherwise, the life cycle on toys is not what is there in the home furnishings business. And there are, yes, you're right, there are a number of components which are there. So, 2 large projects which we executed last year, one had 126 plastic components. The one which we're doing right now has 176 plastic components. So, we are doing fairly complex projects and very large projects. We are in discussions with customers to scale this business up. We see a lot of potential on this, especially what you said, yes, customers looking at shipping out of China to India. So we see a lot of potential there. But it will take and it's slowly evolving. So we are working with our customers and seeing how we can grow that business.
So what I'm trying to understand is, the life cycle of a product in toys, how that stand in comparison to what we have right now. The second is obviously there is business, but how do we scale it up? Just trying to understand. I'm pretty sure there is no dearth of business opportunity available. Business opportunity is there.
So what we're looking at is, so there are some toys which have a life cycle of somewhere between 1 to 2 years. There are some toys which are evergreen toys which have a life cycle of 5 years, 10 years, 15 years, which are typically games and those type of products. But we'd like to look at a balance of some products where you can have those running on a regular basis, on a year-on-year basis, and then every quarter or every 6 months we basically do some launch of new products and everything. So we will be working on a strategy with the customer on something on these lines.
Mm-hmm. So right now basically we have a mix of product which will have a life cycle of 1 or 2 years. At the same time we have a product which has got a life cycle longer than that. Is that fair understanding as of now?
Yes.
Okay. And just one further step on this. How long it takes to get one product approved by the vendor for whom we are manufacturing the same? It's a 6 month duration or a 9 duration, or how does that work?
Depending on the product, but once you start the development, it's typically a 6 month process.
Okay. And I believe that we don't develop, we just try to do what they say, or they've given a prototype to us.
Yes, but then we get involved with the customer when the mold is being developed. So from that perspective, we would be involved at the time of the mold development.
Okay. And just trying to understand what portion of our facility presently would be dedicated specifically for toys. With all the facilities that we have, I'm pretty sure the facilities would not be fungible, right? So what percentage of...
The facilities are fungible. The facilities are fungible across businesses.
Even for pharma, sir, the facilities are fungible? The pharma one can be used...
The pharma facility can be used for manufacturing home furnishing. The pharma facility is a rapid clean room manufacturing facility. So if I run a home furnishing,
it's expensive to manufacture.
It's more expensive.
Yeah, it's very expensive to other products in the pharma facility, because as a factory we have to maintain compliances regardless of what we run there. So if we're running a clip in the pharma facility, we still have to maintain all the compliances. It'll run in a clean room. There's higher electricity consumption because of the climate conditions and the humidity conditions. So it's fungible, but there isn't a need to manufacture other products in the pharma facility right now.
No, sir. Just more from the point of view that the toy facility which we have dedicated, probably we can use it for the other products as well, more from that perspective.
We are using. So as and when we have capacity peaks on certain products in a given month or a given quarter, we do end up using cross capacity. So it's not 100% dedicated capacity.
Okay. Fair enough, sir. That's it. Thank you, sir.
Thanks a lot.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for the closing comments.
Thank you, everyone, for joining the call. We hope that we've been able to answer your questions adequately. For any further information, I request you to get in touch with SGA, our Investor Relations Advisor. Thank you and have a great evening.
Thank you, everybody. Thanks.
Thank you. Ladies and gentlemen, on behalf of Shaily Engineering Plastics Limited, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.